What's going on, Investomaniacs? Today, we're talking about Ford and their most recent quarterly report, that's Q1 2019, as well as the long-term prospects for the company. The investor community took this as a great quarter, with the stock popping 10.74% and roughly keeping those gains since that point. It was a good quarter in terms of the stock response. However, we have to also remember where the company is coming from over the past couple years. It has just been an absolute downhill slide. So let's take a look at this quarter's numbers. The revenues came in at $40.3 billion, which was 3.9% less than last year at $41.96 billion. However, that was significantly better than analysts were expecting, so therefore the stock was a little bit lower than it otherwise would have been, which helped the stock pop back up. Our net income came in at $1.15 billion, which was a significant decrease from last year at $1.74 billion. Our net income per share on a GAAP basis was 29 cents, which was a 32.6% decrease from a year ago at 43 cents. However, it should be noted a lot of those losses in terms of the net income are still due to parts of the company which are in the process of being shut down by new CEO James Hackett. On an adjusted earnings per share non-GAAP basis, we have earnings of 44 cents, which is a 1 cent improvement from a year ago. Again, this was significantly better than analysts were expecting, and therefore that helped the stock pop up. Now, what is the new CEO, James Hackett's strategy? He's been the CEO of Ford for about 2 years now, and he had a very clear strategy. Hey, Ford's balance sheet is in a lot of trouble. We're in a little bit of emergency mode now. We need to shut down all of the unprofitable segments of Ford to protect the bottom line and protect that dividend. I would say if that's his goal, he's done a good job. He shut down all of the cars that were being produced by Ford, sans the Mustang, and he has significantly reduced foreign exposure where they weren't doing so well, particularly Europe, Latin America, Russia, and China, which I know is like most of the world, right? And he also, conversely, he has increased investments in autonomous driving and electric vehicles, a place where Ford was lagging, and that those areas are instrumental to Ford being competitive in the future. So it's good and encouraging to see that. Let's take a look at some of the long-term numbers. Revenue over the past 5 years is increasing at less than 2% per year, and over the past 10 years, less than 1% per year. So on a real dollar basis, after inflation, we're actually shrinking our revenues slightly. Our operating income is significantly down. Our net income is significantly down. Our earnings per share over the past 3 years are almost at negative 21% per year, and 5-year basis at negative 12% per year. Should you buy Ford? If you are in your 40s or older and you're primarily looking for that dividend, which, let's be honest, that's probably why you're buying Ford, I think at this point in time, you are now safe to go ahead and buy the stock. It's a very cheap stock. However, it's no longer, in my opinion, a value trap. With new CEO James Hackett over the past 2 years, he's been cutting a lot of expenses, and he's doing a better job stabilizing that bottom line. So I would say going forward, it's probably a relatively safe dividend you are looking at. However, if you're in your 20s or 30s, I would say probably look elsewhere. You really shouldn't be pushing for that much dividend exposure in your 20s or 30s, and look for a company that has more top line growth. Hope you guys have a great day.